Welcome once again to our discussion of adjusting entries. So this is the second video discussing on adjusting entries. So if you haven't seen the first one, I suggest that you scroll the videos that I have posted on my YouTube channel and to get started. But if in case you have already viewed that one, this is the second one. So today we are going to discuss about adjusting entries again, and this time we're going to tackle on accrued expenses. Okay, so accrued expenses. So what are accrued expenses? Actually, you have here the meaning of accrued expenses posted on our blackboard or our at the top. You can see there the definition of accrued expenses. So any expenses that are related to our operations are considered expenses incurred for the current period. Okay, so just be sure that all those expenses are really related to the income that we have earned during the month. So what are accrued expenses? These are incurred operating expenses that at the end of the month we were not able to pay them, but since they are part of the operating expenses, we have to include them. But since we are not paying off cash, we are going to post them as payables. So what is an interesting example of this accrued expense that usually we encounter? It is unavoidable. So one good example is the accrued salaries or the accrued payroll. So say for example, you are paying your employees daily, and then it happens that there are 3 days on a month which were not included in your disbursement because there is a so-called cut-off. So in the board there, you have here an example. December 29, 30, and 31 were not being paid off, but they are a part of the payroll. The employees were able to work for their wages then, but they were not paid off because there are cut off. So the next disbursement for salaries will be on the next month. That will be January. But since this payroll or these salaries are already a part of December, we have to include them in our operating expenses because if we are not going to include them, our operating expenses will be understated. At the same time, our payables will be understated. So our entry will be you debit you debit the expense, of course, and credit payables. So for the account titles, you may either use for the debit, of course, we're going to debit the expense, salaries and wages expense. But for the credit, for the payables, you may use accrued salaries or salaries payable. That will be acceptable, either of the two. So do not be confused about that. No. Accrued salaries or salaries payable. So I hope you, ano, there are still other examples. We have rent, insurance, or any operating expenses that remain to be unpaid during the month because this happens if you're going to prepare income statement or the books. You're going to close books at the or you're going to make your financial statements monthly, so you are going to include all those expenses that are not paid during the month, but since they are a part of the expenses during that month, you have to include them. So that is the reason for adjusting them. So in the next expense that we're going to tackle, that will be we're going to talk about prepayments. So I'll see you on the next slide. So the next adjusting entries that we are going to tackle are the prepayments. So from the word prepayments, there is an advance payment of operating expenses that are to be used for the business. So prepayments are considered as assets because they have economic feature or economic value feature that will benefit the business in the forthcoming years. What are the examples of prepayments? We have insurance, rent, interest, and all other operating expenses that are being paid in advance. So in recording prepayments, in our journal entries, in our original journal entries, there are two methods. We have the asset method and the expense method. So in the next video, we are going to discuss in detail these two kinds of method. For the prepaid or for the asset method, at the time that the company paid expenses in advance, they are treating the account as asset. But if they treat the expense or the advance payment for operating expenses are outright expenses, so they are recorded as expenses. But at the end of the accounting period before the preparation of financial statements, whether it's prepaid or whether it's asset method or expense method, to conform to the matching principle, we have to allocate the expenses into their proper accounting period. So that's the reason for adjusting entries. So we will be discussing all this in the next video. So please try to watch out for that and uh, subscribe to this channel so that you will be notified of the forthcoming videos that will be posted in my YouTube channel. So thank you so much and have a good day.